Hi, I'm Brendan Jack, Head of Investments and a Director at RMS Advisory. And today we'll be looking at the 2024 return for the RMS Accretio portfolio. Before reviewing the returns and the risk of the portfolios for 2024, I think it is useful to step back and look at the principles that guide these portfolios and how they were set up initially, and the principles that also apply to how we run the portfolios on a forward-looking basis. Firstly, we look for managers who have lower volatility and risk than the peer group average, but we want the portfolios to deliver similar returns to the peer group average over time. Secondly, we select managers who have got lower correlations and different investment styles. Thirdly, we blend these managers in a way to reduce risk and deliver returns. And lastly, we look for investment simplicity. We do not want a long tail of funds in this portfolio. Must be short and concise as possible. In terms of looking at the portfolio, the Accretio portfolio, I think it's always useful to take a step back and give a bit of an overview to look at what the objectives are and what the strategy is. Simplistically, this portfolio is a moderate risk portfolio. So what that means, it's about a 5 out of 10 risk. The return objective there over time is to deliver inflation plus 4 to 5% per annum. Importantly, over 2024, the Accretio portfolio delivered positive returns of 11.3%. This was ahead of the return objective of inflation plus 4 to 5, call it 4.5%. Inflation was 4.4%. So the return objective therefore is 8.9%. So doing well ahead of the return objective. Compare that to the peer group average. The peer group average was 13.4%. Importantly though, within the Accretio portfolio over 2024, all the underlying investment funds within the portfolio delivered positively towards a portfolio return. And to contextualize 2024's returns, I think it is always useful to look back at risk and return. And on this basis, it is always useful to look at it with a bit of a longer term time horizon. And in this case, we're looking at it from a 3-year risk and return point of view. And as you can see, Accretio over the last 3 years has delivered an annualized return of 9.3% versus the peer group average of 8.3%. So that's a good outperformance over the 3 years. Importantly though, those returns were delivered with a lot more consistency over the 3-year period, as it speaks to the 80.5% of the time the returns were positive in the portfolio. You compare that to the peer group average, which was only 58.3% of the time returns were positive. So significantly outperforming in that regard. The maximum drawdown is another thing to also consider, which is quite important. So over the last 3 years, you'll see that the maximum drawdown within the Accretio portfolio has been minus 1.4%. If you compare that to the peer group average, that's minus 6.6%. And then the months to recovery is another way to look at that. So there again, after taking that fall over the last 3 years, it took Accretio 2 months to recover. The peer group average also took 2 months to recover. So to contextualize the 3-year risk and return, I think it is always helpful to look at these things from a graphical point of view. And on that basis, you'll see on the screen a scatter plot showing the risk and return over 3 years. The vertical axis is the return, annualized. Horizontal axis is the standard deviation, in other words, the risk. And what you can see, a whole lot of gray dots on screen. Each dot represents one peer group fund. The green dot in the middle is the peer group average. The black dot is the RMS Accretio portfolio. And importantly, speaking to the previous slide, you can see that Accretio has delivered slightly higher returns than the peer group average, but with significantly lower risk. As you can see, but it's in the top left-hand corner of the scatter plot.